U.S. markets hit record highs on Wall Street yesterday in reaction to Donald Trump's election victory, with the Dow, S&P 500, and NASDAQ all surging. This morning, futures are pointing up for a second day. And today, the Federal Reserve is expected to cut interest rates for the second time this year. Fed Chair Jerome Powell is set to make the announcement this afternoon. This comes after the Fed shaved borrowing costs by a half point back in September, leaving the current federal rate in a range between 4.75% to 5%. And joining us now for more on this is CBS News correspondent Kelly O'Grady. And so, Kelly, timing of this is interesting. What more do we know about this expected cut and why the Fed might make this decision now?
Yeah, so Tom, we are expecting another quarter point cut today based on the Fed's messaging thus far, and especially after that last meeting. I mean, the Fed's job is really to control inflation and protect the jobs market. And so what they've seen from the economic data is that inflation, the rate of inflation is coming down. The jobs market is cooling, but still strong. That October jobs report was a little bit of an anomaly. There was a little bit of noise there. So what they're looking at is, okay, things are going in the right direction, but we want to ensure that the labor market doesn't cool off anymore. So that's why we're expecting to get that quarter point cut. The two things that I think are really interesting here are going to come in the press conference with Fed Chair Powell after that decision comes out at 2. And we're really going to be looking at messaging. We have a new president-elect. Some of his policies have been said to be potentially inflationary. Is that going to factor into their rate-cutting cycle trajectory at all? Are they going to be thinking about, well, maybe come December or January, we pause, we don't do a cut? So those are kind of the tea leaves that you try and read, Tom, but we are expecting that quarter point cut based on the economic data that's come in.
You know, speaking of the president-elect, one of the main things he campaigned on was the economy. The market reacted positively to President-elect Trump's election victory. Is this upbeat mood from investors likely to continue, or do you think it's just a flash in the pan?
Yeah, so the market, again, it's like reading tea leaves. But look, the market performed very well under both President Biden as well as former President Trump during that period. And I think what you were seeing yesterday is Trump is likely to be very good for business. That is what they're betting on. He has floated cutting the corporate tax rate. He has floated a lighter touch regulatory environment. Investors are looking at this and they're saying, hey, that is potentially good news for corporate profits. Shareholders are sort of throwing money in. Also, if you follow crypto at all, I'm a nerd in that space. Bitcoin spiked. Former President Trump is expected to be very good for that space as well. Whether it's a flash in the pan, I mean, markets, you see these big swings, whether there's a new president or there's new economic data, and it tends to kind of go in these cyclical pieces. But like I said, it was good under former President Trump. So I think overall, we can expect the markets to trend that way because so much of it rests on corporate profits, corporate returns, and they're expecting President Trump or former President Trump to be good for that space, Tom.
Yeah, certainly a lot of people very happy about that. Kelly, breaking down all the numbers for us. Kelly, thank you.